All right, today we're jumping headfirst into the absolutely wild world of crypto futures trading. It's a place of huge opportunity, but also, you guessed it, huge risk. And trust me, it is way, way bigger than you probably think. So just to kick things off, I want you to take a look at this number. $86.2 trillion. According to CoinGecko, that was the total trading volume for crypto derivatives in just 1 year. It's an absolutely mind-boggling figure that pretty much dwarfs everything else in crypto. So you have to ask, right? What is this market? How is it possible that it's nearly 4 times larger than the regular everyday buying and selling of crypto that most of us are familiar with? Well, let's get into it. That insane volume, all of it, comes from something called crypto derivatives. And within that world, the undisputed king is futures trading. This is where all the high stakes, high leverage, high adrenaline action really happens. So what even is a derivative? Well, the key thing to get is that you're not buying the coin itself. Not at all. You're buying a contract about the coin. You're basically placing a bet on which way the price of something like Bitcoin is going to go without ever actually holding any Bitcoin in your wallet. And that brings us to the most important distinction you need to understand in all of crypto trading: the difference between spot and futures. They might sound kind of similar, but believe me, they are two completely different ballgames. The split is pretty simple when you break it down. With spot trading, you buy it, you own it, it's yours. With futures, you just own a contract. But here's the real game changer: leverage. It lets you control a massive position with just a little bit of your own money. Of course, that kind of power comes with way, way more risk. Now, when you hear people talking about crypto futures, 99% of the time they're talking about these things called perpetual futures, or just perps. What makes them so popular is that, unlike old school futures, they never expire. You can hold your position pretty much forever, as long as you don't get wiped out, that is. Okay, we have to talk about leverage. This is the engine that drives the entire futures market. It's what makes people fortunes overnight, and it's also what completely blows up their accounts, sometimes in the exact same day. It is a true double-edged sword.
Let's make this super simple. Imagine you've got $1,000 and you decide to buy some crypto on the spot market. It's a one-to-one deal. Your $1,000 gets you exactly $1,000 worth of that crypto. Simple.
Now, let's say the price of your crypto jumps up by 10%. Your investment is now worth $1,100. You just made a $100 profit. Straightforward, right? Your profit perfectly matches the market's move. But what if you wanted more? What if you were so sure about that 10% jump that you wanted to make a much, much bigger bet than your $1,000 would normally allow? Well, that's exactly where futures come in. Using something called 10x leverage, your $1,000 isn't just $1,000 anymore. It becomes the down payment, the margin, to control a $10,000 position. You're basically borrowing the other 9 grand from the exchange to supercharge your trade. So when that same 10% price jump happens, it's not a 10% gain on your little $1,000 stack. No, it's a 10% gain on your massive $10,000 position. Your profit is now $1,000. That's 100% return on your own money. And that is the incredible magnetic pull of leverage. But, and you knew there was a but, and it is the most important but in all of trading, that sword cuts both ways. Leverage amplifies your losses just as brutally as it amplifies your gains. So, what happens if the market moves 10% against you? You get liquidated. That's what happens. A 10% drop on a 10x leverage position equals a 100% loss. The exchange instantly and automatically closes your trade, and your initial $1,000? It's gone. Poof, vanished. There is no hodling or waiting for it to come back. You just get wiped out. And, in the crypto markets, volatility isn't the exception, it's the rule. These huge, sudden price swings are precisely what trigger those massive liquidation events you read about in the headlines, where billions of dollars in trades get erased in a matter of minutes. So, knowing the incredible risks involved, where do people actually do this? And more importantly, how do the traders who are actually successful manage to survive? Let's take a look at the platforms, the arenas, and the absolute must-follow rules of the game. These are some of the biggest battlegrounds where traders duke it out. And you can see the leverage they offer is just wild, all the way up to 125x. But look closely at the fees. Some platforms like BitMax even have a negative maker fee. That means they will literally pay you a tiny bit just for placing an order. It's one of the ways they fight for a piece of those billions in daily volume. Now listen up, because for anyone who wants to last more than a few days in this game, these are not suggestions. They are ironclad, non-negotiable rules for survival. Every single one of them, from never risking too much on one trade to always using a stop loss, is about playing defense. You have to protect your capital before you even think about making a profit. That is the only thing that separates the pros from the people who get liquidated. All right, we've seen the incredible power and the terrifying danger. So that brings us to the final and most personal question of all. Should you even be thinking about trading futures? Let's figure out who each style is actually for. The choice really just comes down to who you are as an investor. Spot trading? That's the path for beginners, for long-term holders, for people who don't like a lot of risk and who actually want to own the crypto. Futures, on the other hand, are a tool for experienced, short-term traders who understand and are comfortable with the very real possibility of losing everything for a shot at those amplified returns. And honestly, this quote says it all. The experts are all in agreement here. For almost everyone just starting out, spot trading is the only place to begin. Rushing into futures without experience is like learning to drive in a Formula One race. It's just a very, very common way to lose all your money fast. So, at the end of the day, it all comes down to this one question. Is that potential for a massive reward really worth the very, very real risk of a total loss? Only you can answer that for yourself, but now you know what you're dealing with, and that means you can make a smart, informed choice.